Greetings everyone and welcome back to the lesson. The subject is Advanced Taxation. We will proceed with the chapter Tax Investigations, which we introduced in our last lesson, where we defined tax fraud as an illegal act of intentionally falsifying information on a tax return with the aim of reducing the tax liability owed to the tax authorities. That is the meaning of tax fraud. And we defined in our last lesson. Today we want to study the events that may trigger a tax investigation. And therefore, by the end of this lesson, you should be able to outline the events which may trigger a tax investigation. And events that may trigger a tax investigation, whether civil or criminal, often involve anomalies or discrepancies that raise concerns for the tax authorities. So in our lesson, we are going to highlight some of the events that may trigger a tax investigation. So welcome to the lesson. The first event that may trigger a tax investigation is discrepancies in filed documents. Discrepancies in filed documents. That is one event. Here we are referring to significant differences between the information reported on a taxpayer's return and information available to the Kenya Revenue Authority. You understand? When there is significant differences between what the taxpayer has filed and the information that the tax authority has. If there is significant difference between the two sets of documents, then that can trigger a tax investigation. Discrepancies in filed documents. The second event is large deductions. Large deductions. Large deductions or credits. Large deductions or credits. Claiming deductions or credits that are disappropriate to the income, especially if they deviate from norms for similar taxpayers. That can attract scrutiny. Large deductions or credits. The second event or third event is consistently reporting losses. Where an organization consistently reports losses year in, year out, consistently, regularly reporting business losses, especially when those losses serve to offset other incomes. That can signal to the tax authority that there is need to scrutinize such a taxpayer. That means that in such a case there is a need for a deeper look into the affairs of the taxpayer, consistently reporting losses. Number 4, the fourth point is in relation to what we call high income earners. High income earners. High income earners. Individuals with higher incomes may be targeted more frequently because of the potential for tax evasion. So the potential for tax evasion for high income individuals is higher. The potential for tax evasion is greater. And the returns on investigating such cases is also higher. So high income earners are more likely to be investigated by the tax authorities because there is potential for tax evasion for such individuals. High income tax earners. 5, cash-based businesses. Cash-based businesses like supermarkets, like restaurants, like salons. These are businesses that predominantly deal in cash. They are often at a higher risk of underreporting income and therefore may likely be investigated by tax authorities. Cash-based businesses. 6, offshore accounts. Offshore accounts and what we call foreign transactions. Offshore accounts and foreign transactions. Offshore accounts and foreign transactions. Now, having financial accounts in foreign countries or engaging in frequent international transactions may trigger reporting requirements and potential investigations. And that will happen if discrepancies are noted. And that is an event that can trigger tax investigation. Offshore accounts and foreign or international transactions. Another event is lifestyle, where lifestyle does not match with the income reported. Lifestyle not matching reported income. Lifestyle not matching reported income. If a taxpayer's lifestyle, as observed through maybe social media or other means, appears to exceed the income they report, then it could raise flags with the tax authorities. Do you understand? Lifestyle not matching reported income. And this, we've had cases in Kenya where celebrities have been targeted by the authorities, where the lifestyle does not match with what they report in terms of income, and they've been subject of tax investigation. Lifestyle not matching reported income. 8, whistleblower. Let me call it tips. Whistleblower tips. Whistleblower tips. These are tips from employees, tips from ex-business partners, or any other person who may provide information to the tax authorities, all right, that can trigger tax investigation. Whistleblower tips. And that can only happen when the whistleblower has evidence. If the whistleblower has evidence that a taxpayer is engaged in tax fraud, then that can be an event that can trigger a tax investigation. Whistleblower tips. These are tips from employees, from partners, and any other person who may have evidence that indicate that a taxpayer is engaged in tax fraud. Whistleblower tips. 9, random selection. Random selection. Sometimes taxpayers are selected randomly for an audit, which can then uncover issues that lead to more audits, more in-depth audits or investigation. Random selection. There are times when the tax authority can select randomly, can select taxpayers randomly. The purpose is to uncover issues that can lead to a more in-depth investigation. That is an event that can trigger a tax investigation. Previous audit history. Number 10, previous audit history. Previous audit history. Taxpayers with a history of audits that have resulted in additional taxes or may likely be audited again and again. If, say, the tax authority randomly selected taxpayer A, randomly, because we say sometimes that the tax authority may randomly select individuals. If that happens and the taxpayer A is discovered that he's been engaged in tax fraud, then because of that history of, say, evading tax or not reporting income, under-reporting income, that can be a basis upon which or an event which may trigger subsequent tax investigation of such a taxpayer. Previous audit history. Taxpayers with a history of audit that have resulted in additional taxes. If taxpayer A has been audited and it has been discovered that he or she or the company or the organization needed to pay additional taxes, and indeed the company paid the taxes, so we're saying here that due to that history, then such a taxpayer is likely to be audited again and again. So that can trigger a tax investigation. Previous audit history. Now, candidates, these are 10 events that may trigger a tax investigation. 10. Number 1, discrepancies in filed documents. Number 2, large deductions or credits. Number 3, consistently reporting losses. Number 4, high income earners. Number 5, cash-based businesses like supermarkets, like salons, like restaurants. Number 6, offshore accounts and international transactions. Number 7, lifestyle not matching reported income. Number 8, whistleblower tips. 9, random selection. Number 10, previous audit history. So candidates, here is important also to note that these triggers can lead to either civil or criminal investigations, depending on the nature and the seriousness of the suspected non-compliance. So, and that marks the end of the lesson. The purpose of this lesson, we say that the objective was that by the end of this lesson, you should be able to highlight events which may trigger tax investigation. Now, based on this lesson, going to give you an assignment, 5 questions, events which may lead to tax investigation. Revision question number 1. What patterns of behavior or financial transactions are most likely to alert tax authorities to potential non-compliance and trigger an investigation? Number 2, how can inconsistencies between a taxpayer's reported income and their lifestyle expenditures lead to a tax investigation? Number 3, in what ways can the activities of cash-intensive businesses such as restaurants and retail stores arouse suspicion and become the subject of a tax investigation? And lastly, what role do whistleblowers play in initiating tax investigations, and what protections are in place for them? Thank you for attending the lesson. I hope to see you in our next session, where we continue to study about tax investigations. God bless you. Bye-bye.